we are solving October 2023 paper question number 4. Sunshine Partners has provided the following information from its financial statements for the year ended 30th September 2023. They have given some information. There is additional information regarding opening inventory, and all revenue on sales purchases are on credit. So now let's solve the first question. So part A, state one reason for calculating each of the following. Now, what is the use of asset ratio? Okay, so asset ratio means it's a ratio between revenue and non-current assets. Okay, so it will tell you how well the business is going to use the assets and generate the revenue. Okay, and also it will help to identify the assets that are making the most and the least contribution to the activity of the business. Profitability ratios, we know there are so many, so I have taken the example of, you give one example like ROCE, where it is net profit over capital employed. It measures the relationship between the profit and the capital used. Okay, profit to the turnover or the capital used. So this helps, this might help in comparisons of different profitabilities made over the previous years. Sunshine Partners, the gross profit as a percentage of revenue. So let's calculate. The formula is gross profit over revenue times 100. So gross profit is also equal to revenue minus cost of sales over revenue times 100. 600, okay, revenue minus the cost of sales, which is 360, over revenue, okay, over revenue. This entire thing you have to multiply with 100, so that value is going to be equal to 240 over 600. Okay, 600 times 100 times 100 percentage, so that is equal to 40 percentage. Okay, so this is the gross profit as a percentage of revenue. Then we have percentage return on capital employed. The formula is profit plus interest divided by capital plus non-current liabilities minus expenses. So gross profit was 240 minus expenses was 220, okay, divided by and then plus the interest, the bank loan interest, which is at 5%, 5% of 80, plus non-current liabilities. The capital is 720,000, okay, plus non-current liability is 80,000. So now let's calculate this value. 240 is 20, okay, 20 plus this 5% of 80 is 4. So 24 divided by 270 plus 80, that is 800, okay, 800. So times 100%, okay, that is equal to 3%. Then next one is non-current assets to revenue ratio. So you can find to be equal to, revenue is 600 and I have employed the non-current assets at 660. So the ratio is going to be equal to 0.90, okay, is to 1. Okay, divide on both the sides by 660. Okay, so if you divide on both the sides by 660, you will get the ratios. Okay, 660, so you get 0.9, okay, is to 1, which means that this is the asset ratio that has happened. For every 1 pound of asset, they have been able to generate a revenue of 0.9 pounds. Then inventory turnover, it is equal to cost of sales over average inventory. Average inventory is opening inventory plus closing inventory by over 2 divided. So that is equal to, okay, the cost of sales is equal to 360 over opening inventory was 75. I'm ignoring the thousands because it gets cancelled. Okay, in the when you're dividing above and the below numbers, so 75 plus 80, okay, divided by 2. So that is equal to 4.5 times. Okay, then trade receivables collection day period. It is trade receivables into 365 over credit sales 120. Okay, so 120 into 365 days, okay, in the year, and 120 was the trade receivables. The invested credit sales that had happened was 600. 600 because all the revenue was in the credits sales, so that is equal to 73 days. Okay, so that is trade receivables collection day period. Then trade payables payment day period, so that is equal to trade payables into 365 over credit purchases. Now this credit purchases is calculated using cost of sales. Equal to cost of sales is 360. That is equal to opening inventory. Okay, opening inventory was 75 plus purchases we had to calculate. Okay, purchases minus the closing inventory was 80. So which means purchases will be equal to 370. So this is a working for getting the cost of sales. Okay, this is payables collection payment day period. So trade payables was around 50. So 50, and the purchases were at 370. Okay, so the 50 times 365 divided by 370, that is equal to 49.32 days. Okay, so 49.32 days. Next, comment upon the ratios calculated in part B and for the previous 2 years for the following headings. Select 2 ratios for each of the following. Control of cash movements. So we can use this profitability ratio and trade receivables collection day period. So we can see that the profitability, okay, profitability, this is the data that is given, and comment on the ratios in the part B and the previous 2 years here, which is given under the section heading select 2 ratios. So first one is for the cash movement. Let's calculate the profitability ratio. So okay, I have taken one percentage return on capital employed. We can see that this was for the September 2021-22, and we had calculated for the year September 23 now. Okay, so how has it deteriorated? It has deteriorated like this. Okay, so return on capital employed had become 3% this year. So it is deteriorating, okay, because ROC has gone down from 10% to 6% to 3% now. Okay, so you can mention the years if you want, from 2021 to 2023, and therefore which means that there will be less cash flowing into the business, right? So the profitability has got reduced, so less cash available in the business for future investments. Then also trade receivables collection day period, so this has deteriorated from 40 days, okay, from 40 days to 73 days, okay, from 40 to 60 to 73, okay, from 40 to 60 it had become to 73 now, okay, in the 2 years. So it has become like this. So which means that there is a slower receipt of cash. So cash is also coming into the business very less, okay, it's taking a longer time. So less cash inflows are happening. Profitability ratios. The gross profit as a percentage of revenue has been improving. It has improved from 30 to 32 percentage. So, and this year the gross profit percentage has increased to 40 percentage. So that is good. meaning either you have increased the prices selling price or you have reduced your purchase cost, because gross profit has all these parameters of revenue and cost of sales. So you can say that you have either, this must have improved either because selling prices have increased or you have reduced your cost or purchase cost or cost of sale. Then return on capital employed continues to deteriorate from uh, that's what 10% to 3 percentage, which may be due to increased long-term borrowing. There was a capital non bank loan taken, so probably because of that you can suggest. So these are the profitability ratios you can comment. Okay, then you have value the use of social accounting in the decision making of a business. So if you're talking about social accounting, you should talk about community, environment, sustainability, employee not being made redundant, or improving the skill of employees and stuff like that. So let's see here. So here we are saying that environment and community is going to benefit if they are going to account decisions, social decisions, so so that environment is safe and the natural resources are sustainable for the community. Okay, and the reputation of the business also will increase because of such a social accounting concept which is taken by the business, considered by the business. So this is going to may help the business, okay, sell more and make a profit. But however, or and it also acts like a marketing strategy, so it is going to help in more sales. However, the negative points of social accounting, we should see that the business will incur costs and sometimes the demand might be lost also, because if people are not aware of such social accounting factors, then it will not lead to higher sales. And also there will be an increased cost because the profit is not the motive now, and you have to account, okay, several factors such as safer use of natural resources or less use of natural resources and stuff like that. So it will have an implication on the cost. This can affect the profit. So in conclusion, social accounting should be used by the business because it's going to help in the